Hello everyone, welcome to the channel. I hope you watched yesterday's video of mine where I explained you how your mindset should be during the market hours. Even today we are going to explain you the same way, like how you have your mindset should be when it comes to trading in the market. And let's go hour by hour even today. Okay, so today market opens slightly gap up. Okay, and market's low was here, somewhere here. This was a low which was printed at 10 o'clock, and where is the high is somewhere sitting here, right? As part of previous day, we need to understand that market gave a break of structure to the downward direction. See, this was the last swing point. Market broke this with a break of structure here, creating a pattern of lower low being formed here. Now today, if market has to go up, it has to give a closures above the lower high. Only then it can be a valid CHOCH, meaning break of structure on the upward direction. Or if it wants to go down, it has to break this particular lowest point, whichever is formed in the market as part of yesterday. So until this is broken, there is no put. Until this is broken, there is no call. This is going to be your mindset at 10 o'clock. So what is the market saying at 10 o'clock? Market is completely ranging. This is a high which was created, but there was no proper closures obtained above the swing point. So we were just monitoring at 10 o'clock. There was no trades taken till 10 o'clock. Okay. So then we moved to 11 o'clock time frame. So let's go back to the replay and let's switch to the market at 11 o'clock. So this was the market at 11 o'clock. So at 11 o'clock, what we see is market gave a break of structure to the upward direction. There were a lot of relative equal highs, which will act as your liquidity. We have told this time and time again. There is an open supply which is left here, and again there is equal highs which is sitting above the supply. So what we can think of it immediately is there are two things. Okay, there is one demand sitting immediately here which caused this break of structure. There is one more demand which is sitting here at the extreme demand, which made this upward trend to be possible. Okay, which demand to choose from? The moment this taps in, we will not be hurrying into a trade, because yesterday we discussed that we need to see a candle at least to close above this recent swing point high to give us a momentum entry, right? This is what we discussed yesterday also. So if I allow you the market to play, it just slided down. It did not give a follow through. Nothing of that sort was happened. So this demand eventually becomes invalid and we can remove this. Okay. So we need to wait now patiently and see if we can get a tap. You can argue that there is a small close enough point obtained. See, even 0.05 is a difference which is considered as an imbalance of the market. If you see the high here of this particular blue candle, the high is 23911.40. The low is 23911.45. 0.05, there is a difference. This 0.05 will still act as imbalance, and market will tend to come back to this particular point and then will rally up. Always understand this point. Even 0.05 will act as a beautiful imbalance in the market. So we get a tap and we get a rally. So again, if I switch back to this particular candle where we got a tap, right? If I select this bar and switch to 1 minute time frame, what we observe here is we get a tap and we immediately close above this range, right? That is why we can do a momentum entry in this candle itself. If you are a risky trader, you can enter on the tap itself. Okay, since there is no other extreme demands available apart from this extreme demand in 5 minutes in this leg of price action, it is better to do a momentum entry. Okay, so where can be the targets? So immediately what we can see is there is a supply which is sitting here, this particular small indecision candle which is not yet completely retested. This is a supply, and we have marked a extreme supply also. Since this did not create a break of structure on the downward direction, this supply is not valid, and eventually this will become your target. If the market rallies up, we can see a equal highs being taken out from the market. So since today is an expiry, it is better to close the position once this particular supply is being reached. So allowing the market to play. Market was little bit consolidating before giving you a solid upward movement. Process will take you places where you cannot even imagine. This trade, if you had executed it properly, you can go and check any call position. What was the entry of call position at somewhere close to 1220, and what was a position value at 210? You would see it would have been literally more than double or even more than triple sometimes based on the contract which you choose. Even if you choose 23,950 CE, it was somewhere close to around 20 rupees at the time of this particular place. That's what I entered basically. And at the time this reached, it was close to 55. You go and check yourself. 20 to 55 is almost 150 percentage returns. I'm not saying you should enter with 20,000 rupees or 2 lakh rupees into that 20 rupees, because this can also go back downward and make that contract down to zero, today being an expiry. Okay, so what is the important lesson that you have to take out from this video is, let market go, give you a trade, only then you execute. You should not hurry into any trade. Today is second day where I'm explaining you on a consecutive basis that if you follow the process, you can make money in the market. If you follow the structure, if you understand liquidity, if you understand supply and demand, you can easily take such winning trades also. If you are interested, I'll put a link in the description where you can reach out to me getting the full course details, where I implement this on a daily basis also. Okay, I hope this video is educative. Thank you so much for watching. We'll meet in the next education. Thank you so much for watching. We'll meet in the next education video.